Recording in
So good morning all. Can you hear me? Am I audible? Yes. So good morning, Susan. Good morning, Aradhi, Neetu, Farzana. Morning, others. Is the video clear? Can you please confirm whether the video is clear? Perfect. Okay. So let us start the session with a recap of what was done yesterday. Yesterday, we introduced financial reporting. What we have done was introduction to financial reporting or introduction to Ind AS. Introduction to Ind AS, as well as our paper. We understood that in our paper, there are certain topics which are considered to be heavyweights. So which were the topics that we said to be heavyweights, most important or heavyweights? The topics that was referred to be heavyweights are discussion on Schedule 3 or Ind AS 1. Next, we have financial instruments. Financial instruments. These are set of 3 standards, that is Ind AS 32, 109, and 107. Then we have business combination. Business combination is Ind AS 103. Then we have consolidation. Consolidation, we say that it is Ind AS 110, 111, but it is actually not only 110 and 111 deals with consolidation procedure. There are other Ind AS also, like Ind AS 27 also we should be covering during the course of this particular standard. Then we have lease, that is Ind AS 116. Out of all these standards, this is the most recently introduced standard. Then we have revenue from contracts with customers. Ind AS 115. So these were the, as far as I am concerned, the heavyweights, the most important topics. And Then I said there are other challenging Ind AS. Which all were the challenging Ind AS that we refer to? Challenging Ind AS. We said we have share-based payments. That is Ind AS 102. Then we have employee benefits. Ind AS 19. We have income tax. Ind AS 12. We have first time adoption. Ind AS 101. Interim financial statements. Ind AS 34. And impairment. Ind AS 36. These were the challenging Ind AS that is there in the syllabus. Then we said, okay, there are other Ind AS. There are other Ind AS. There are lots of other Ind AS like our Ind AS 2 that deals with inventory. Ind AS 16 that deals with the property, plant and equipment. This is something that you have learned. AS 10, the counterpart is accounting standard 10, PPE. And this accounting standard 10 was a revised standard, which was revised on 33, 2016. So this is almost similar to PPE. So this standard, whatever that you have learned in your intermediate, it is exactly same as what you will be learning in CA final. In AS 16, property, plant and equipments. We have Ind AS, say 38, that deals with intangible assets. Ind AS 20 that deals with the government grant. So etc. etc. I'm not going to list down every standard. So these are other standards, at least the counterparts you have learned in your intermediate syllabus. At least the counterparts you have learned in your CA intermediate syllabus. Okay. One second. Shini, I think your audio is enabled. I'm not able to mute you from here for some reason. Kindly do it at your. Okay, now it is done. Perfect. And there are two other topics which is not related to Ind AS, other area. That is corporate social responsibility as well as integrated reporting. No, we can say kind of theory area. maybe around 5 marks. They'll be testing around 5 marks. They'll be testing theory area. Otherwise, almost everything will be Ind AS itself. We know Ind AS. There are certain Ind AS where you have a considerable amount of writing involved, and there are other Ind AS where it is pure number crunching. Pure number crunching. Okay, one Ind AS which I forgot to write in this list is inside this challenging Ind AS we can also write earnings per share. What? Earnings per share. That is Ind AS 33. So these are the topics that we should be learning. At least this you're comfortable, sir. These are the areas that we have to learn in our entire course of lecturing. Okay, now then we started with sir, what is special about Ind AS? We said there are two series of numbering. There are two series of numbering in for Ind AS. One is a 2-digit number. One is a 3-digit number. So 2-digit number, you are from Ind AS 1 to 41. Need not be worried. You don't have 41 standards. Okay. Lots of standards have been withdrawn and new standards have been introduced under the 3-digit series. Also, we have from 101 to 116. I think you're comfortable that we have two series of numbering, 2-digit numbering as well as 3-digit numbering. Numbering and all we'll learn. Okay. Once the session is over, once the session is going to get over, I think all the numbering wise you'll be comfortable. So which standard, what is the number? Now, then we started discussing about the speciality of Ind AS when we compare accounting standard. When we compare accounting standard with Ind AS. So one speciality that was highlighted is more emphasis on substance over legal form. More emphasis is given for substance over legal form. This was what actually we were discussing yesterday. Few theoretical discussions were over. Today, what we'll be doing is we'll be doing certain practical discussion to make you convinced how it is being done. Clear? So in substance over legal form, we said that if you look into preference shares, if we look into redeemable preference shares, as per our Companies Act, we call it as capital. We call it as preference share capital. But as per Ind AS, we have to decide whether there is a fight happening. There is a fight. What is a fight? Sir, is it actually capital? Is it actually capital or liability? Is it actually capital or liability? Is it actually capital or liability? And we observed that, sir, redeemable preference share means there is an obligation to pay cash. Obligation to pay cash. Since there is an obligation to pay cash, now you tell me in the chat box, as per Ind AS, it will be classified as capital or it will be classified as liability. What are your thoughts? It will be classified as liability. So therefore, in Ind AS, it will be classified as liability. In Ind AS, it will be classified as liability. Similarly, substance of the transaction, though you call it as a capital, it is in fact a liability, it is an obligation to pay cash. Another thing that we discussed was, sir, assume if it is irredeemable preference shares. Irredeemable preference shares. Now, can you tell me? Irredeemable preference shares. Can you tell me, is that a liability or a capital? Can you tell me, is that liability or capital? Irredeemable preference shares. Is there any liability for the company to repay cash? Is there any obligation? Is there obligation to pay cash? Tell me. Answer this question. Is there any obligation on part of the company to pay cash? There is no obligation. There is no obligation. To pay cash. Therefore, this will be treated as capital. Now, we are not going to use the word capital. In Ind AS, it is known as equity. What? It's an equity instrument. I repeat, it is an equity instrument. It is an equity instrument. I repeat, I'm not calling it as equity share capital. I'm not calling it as equity share capital, but it is exhibiting characteristic of equity shares. It is exhibiting the characteristics of equity shares. Though you call it as preference shares, it is exhibiting because there is no obligation to pay cash. So it is an equity instrument. It is an equity instrument. We can say it is exhibiting 100% equity characteristic. 100% equity characteristic. It is exhibiting 100% equity characteristic because there is no obligation. Now you think about a preference dividend. Preference dividend, is there an obligation on part of the company to pay? Is there an obligation? You tell. Is there an obligation to pay preference dividend? What are your thoughts? Is there any obligation on part of the company to pay preference dividend? To make it more interesting, I'm saying the preference shares are, it is cumulative. Tell me. Assume preference shares are cumulative in nature. Dividend is cumulative in nature. Is there any obligation on part of the company? So Sri Lakshmi says there is an obligation. Now let us learn from the name. Preference. What do you mean by preference? Preference, priority. So preference dividend means, is that a mandatory dividend or a dividend which will be given on a priority basis when compared to equity dividend? Tell me, Sri Lakshmi. Let's discuss from the name itself. Preference dividend means mandatory dividend or a dividend that will be given on a priority basis when compared to equity dividend. It is just, it will be given priority only if equity dividend needs to be paid. Only if equity dividend needs to be paid, then preference dividend has to be paid prior to equity dividend. Isn't that? Isn't that we have learned? If I want to pay equity dividend, I have to ensure that whatever arrears are there, I have to first of all, I have to ensure that all the arrears have been paid. Only then I'll be able to make a distribution to equity shareholders. So assume that I'm saying that I'm not going to pay equity dividend for 5 years or 10 years. All these years when preference shares were in existence, say 5 years, and I'm not making a payment of equity dividend for 5 years. So even though it is cumulative in nature, even though there are arrears of preference dividend, we need not pay. It is not a mandatory payment. It is a voluntary payment. Is this point clear? So there is no obligation. Even if it is cumulative, there is no obligation. No obligation to pay preference dividend. So if I look into that particular instrument, irredeemable preference shares, there is no obligation to pay dividend. There is no obligation to pay the principal amount, the capital amount that you have received. So it is 100%, it is exhibiting what characteristic? 100% it is exhibiting what characteristic? Chat box. 100% it is exhibiting what characteristic? Equity characteristic. Equity characteristic. Now, assume that there is a redeemable debenture. Another instrument. Let us discuss about another instrument. Redeemable debenture. Tell me, sir. On account of this instrument, what are the obligations on part of the company? Can anyone tell me? What are the obligations on part of the company, say over a period of 5 years? Is there any obligation to pay cash? Very good, Farsana. There is an obligation, interest. There is an obligation to pay. There is an obligation to pay interest. Okay, this I have to pay for 5 years. So 1 to 5 years. All the 5 years I'll have to pay. Year 1 I have to pay, year 2 I have to pay, year 3 I have to pay. Is that the only obligation? Is that the only obligation? Interest, there is an obligation to pay cash. Also, there is an obligation to repay the principal amount or the capital amount, whatever you call it as. Calling it as principal amount. Obligation to redeem. Now you tell me. You tell me. So is it exhibiting 100% liability characteristic or 100% equity characteristic or some equity characteristic, some liability characteristic? What are your thoughts? Is it representing 100% liability characteristic, 100% equity characteristic, 100% or some equity characteristic and some liability characteristic? Okay. So let me come to Vaishnavi. Vaishnavi, why do you say that some equity characteristic? Where is that equity characteristic that you can identify? Now, with respect to interest, it represents liability characteristic. With respect to your redemption also, face value also, it represents liability characteristic. I can't see anything equity being presented. True, but I said redeemable debentures. I never said a convertible debentures. I'll come to convertible debentures as the fourth scenario. Is that okay, Vaishnavi? Now we have taken heading what? Redeemable debentures. In the fourth case, we'll take the case of a convertible debenture. Okay. So now this is pure liability. This is pure liability. Very good. So let's come to the next category. Assume that convertible debentures. So here say 1 to 5 interest. There is an obligation to pay cash. There is an obligation to pay cash. What is a characteristic? Sir, liability characteristic. And year 5, there is an obligation to issue. There is an obligation to issue. For some purpose, I'm writing like this. Fixed number of equity shares Assume that they will be converted into 10 equity shares. So fixed number of 10 shares. Very important it is, because the moment I write it as variable, it is altogether a different scenario that we are discussing. So in detail discussion we will be doing in financial instrument. Now it is superficial discussion. Okay. To highlight that substance over form, I just wanted to give you some superficial discussion. That is what has been happening. By no means I'm discussing the entire financial instruments right now. Some discussion is what we are doing. Now, you tell me, there is an obligation to issue fixed numbers because it will get converted to 10 equity shares. Now that obligation to issue fixed number of equity shares, does that exhibit a liability characteristic or an equity characteristic? Does this exhibit a liability characteristic or equity characteristic? True. So this is exhibiting equity characteristic. Equity characteristic. So can I say that this instrument is playing dual role, double role? Can I say that this particular instrument, this convertible debenture, that exhibits two characteristics, or it plays two roles when it comes to balance sheet? One role of a liability, another role of a equity instrument. I repeat, I'm not calling it as equity share capital. It's important to identify, it's not equity share capital, it is equity. Okay, equity characteristic. So can I say such instruments are known as compound financial instrument? Such instruments are known as compound financial instruments. Compound financial instruments. What is the speciality of compound financial instrument? Sir, compound financial instruments exhibits two characteristics. A part will be financial liability and a part will be equity. Is that clear? Is that clear? A part will be financial liability and a part will be equity. A part will be financial liability and another part will be equity. Is this point clear? Compound financial instrument, an instrument which exhibits dual characteristic, an instrument that exhibits dual characteristic. Now we have seen three instruments. Coming back, irredeemable preference shares. It's 100% equity instrument. Redeemable debentures, it is 100% liability. Convertible debentures, it is partly liability, partly equity. Partly liability and partly equity. Have you understood this? Now in detail, we'll be discussing all these things are part of financial instruments. So in detailed definition, everything discussion will be done when we come to financial instrument standard. At least passing reference superficially. Is it okay? Now coming to, now many people will be having doubt as to, sir, how do you split it? Okay, sir, how are we going to split it? 100% liability, I understood, sir. 100% equity also, I understood, sir. Sir, how do you do the split between what is financial liability and what is equity? Now your mind will be thinking in those lines. Sir, how am I going to do the split? We'll come to the split. I've taken few examples. So before that, we'll come to another discussion. Okay. So can I take you to CA Intermediate Financial Management? Can I take you to CA Intermediate Financial Management? Can we just recap what was learned in financial management? Can we come back to CA final FR? Okay. Now, CA Ind AS. FM. Sources of capital. Can you tell me what are the three sources of capital? What are the three sources of capital? From where will we raise capital? Or from where will we raise funds for the purpose of doing business? You have a business idea. You have a business idea, but you require money. So what is the source? From where will you raise money? There are three sources: equity, preference, and debt. Equity, preference, and debt. Very good. Equity itself, I can classify into two. External equity. That means you are issuing equity shares. External equity. You are issuing equity shares. Now, what is happening with the LIC? They are raising additional capital by issuing equity shares. But they do have an internal source. What is the internal source? That is your retained earnings. Retained earnings. Internal sources, retained earnings. Now we have learned a chapter known as cost of capital. Tell me, what is the cost of external equity? We call it as KE. What is the cost of internal equity? We call it as KR. What is cost of preference? We call it as KP. And what is cost of debt? We call it as KD. Tell me, sir, have you come across all this at CA inter level? Have you come across all this at CA inter level? Yes. Okay. Now, tell me, let's focus on KD. I'm going to take a bank loan. Can you tell me what are the costs that I have to incur, or what is my cost of taking a bank loan? What is the cost of taking bank loan? What is the cost to the company for taking bank loan? Very good, you have said interest. But is this the only cost? Is this the only cost of taking bank loan? Is this the only cost? Sri Lakshmi says, sir, there could be some charges. Farzana says that repayment. What repayment are you talking? Principal repayment. Principal repayment is not my cost. I got 100 rupees and I repaid 100 rupees. There is no cost. Isn't it? You paid me 100 and I repaid you 100. What is the cost? If I pay you more than 100 only, there is a cost. Isn't it? You paid me 100, I paid you 105 rupees. So that 5 rupees is my cost for taking funds from you. Isn't it? So I'm not talking about principal repayment. So is there a cost? Yes, there is a cost. Interest is a cost. Sri Lakshmi says that, sir, there are charges. Yes, true. Because if I go for bank loan, I have to pay certain charges, say processing fee. But what is the speciality of processing fee? You tell me this processing fee each and every year you have to pay. Or is that a one-time cost? So this processing fee is a one-time cost. Interest is recurring. Interest is recurring. So you have identified cost. Very good. Now tell me, sir, what is the cost associated with the preference shares? Can you tell me what is the cost for the company associated with preference shares? Ignore accounting, everything. We are not discussing any accounting here. We are discussing pure finance. Yes, sir, preference dividend. Now you need to say, sir, preference dividend, it is not mandatory, all those things. Don't say whether it is mandatory or not. Is there a cost? There could be a cost. Yes. So the shareholders expect dividend. So preference dividend is the cost. Is this the only cost? Is this the only cost? If I've borrowed money, if I've raised money from preference shares, being a company, I have to pay preference dividend. So that is my cost. I accept it. Is that the only cost? Farzana, very good issue cost. If I want to issue preference shares, there are certain costs that I have to incur. So issue cost is another cost. Similarly, can you tell me what are the costs associated with the external equity? So far, it is good. You're giving out whatever is required. Can you tell me what is the cost associated with external equity? We have equity dividend. Similarly, we have issue cost. Can you tell me what is the cost associated with the retained earnings? Now, if you see in FM, you have learned that here you will be considering only dividend. There is no issue cost. There is no issue cost because you are not issuing any equity shares. Internal funding only. There is no issue cost. There is no issue cost. So are you able to get the concept of I have a dividend as well as an issue cost? So this transaction cost, is it clear? There could be transaction cost. Is that clear? There could be transaction cost in all the categories. Is that clear? Now, I want to express this cost in percentage terms. So if I want to take a bank loan, I have to express what is the total cost. And that percentage terms is known as KD. Am I right? Whatever is the cost expressed as in the percentage term, it is known as KD. Am I right? Now you have identified, sir, interest is a cost. Processing fees are cost. I can say interest is 10,000 rupees. Processing fees 2,000 rupees. I don't want rupee terms. I want to express as a percentage terms. I want to express in percentage terms. And we call it as cost of debt, or that is the chapter that we have learned, cost of capital. Okay. Now Farsana is giving me formula also. Very good. Obviously, I require the formula. So proactively giving the formula is good, but there is some problem with that formula. Okay. The formula is partially correct. You forgot to write one particular point. Okay. So let's come to this concept. Sir, how do you compute? How do you compute that cost, percentage terms? How do I compute? Is nothing but this cost is nothing but IR. The cost is nothing but IRR. So that leads me to the next concept, IRR. Have you learned IRR, internal rate of return? If yes, in financial management, in which chapter? So far, we were discussing cost of capital. Now, from cost of capital, I said I want to express in percentage terms. I said that percentage terms is IRR. So my next question is, have you learned IRR? Very good. In capital budgeting. You have learned the concept of IRR in capital budgeting, isn't it? Now, please, few of you will be having a doubt, sir. Why are we discussing? Why are we discussing FM inside financial reporting? If you have that doubt, now, why am I doing all this? Let me give you the context. Or you might think that, sir, the discussion is not relevant for us. Let me go have a tea and come. I'll, once the relevant topics are there, I'll attend this session. No. Everything is relevant because there are certain terminologies in this particular subject which seems to be new. Again, I repeat, which seems to be new, but in fact, it is not new. So let me bring all those terminologies. So what I'm trying to do is I'm discussing one important concept here. The only thing is that I'm not taking that particular term which is given by the standard, because I know that this term can be easily explained with the help of your CA intermediate, something which you have already learned. Now see this 1 second. Okay. What is written here? EIR. Does it sound like IRR? There is a term using it. This is known as effective interest rate. Effective interest rate. Effective interest rate. Does this sound like IRR? Effective interest rate. Does this sound like IRR? Obviously, this sounds like IRR, or this is IRR in fact. So my objective is to introduce this particular standard, or we can call it as kind of a warm-up session, wherein random things we are bringing, we are trying to connect with our previous level knowledge so that whatever we can link and learn, it becomes easy for us. Clear? So there is nothing like I'm discussing CA intermediate. I'm discussing something which is relevant for CA final only. But since you have already learned, I'm taking the reference of intermediate. So can I do that? Can I do that? Do I have your permission? Okay, so coming back, we have learned IRR in capital budgeting. What is IRR? It is nothing but a rate implied by cash flows. A rate implied by cash flows. Okay, I'll take an example. Now see this. 1 second. Okay. So I think you are able to see the Excel file. I think you are able to see the Excel file, isn't it? What is done is I've just made a template. We are trying to develop a IRR. We are trying to get what is IRR. So I'm saying that there is a project. I have to invest. I have to invest, say, 1 lakh. Investment 1 lakh. So is there a cash inflow or outflow? Cash inflow or outflow? There is a project, I have to invest 1 lakh. Outflow. Capital budgeting. First year I'll get 30,000 rupees. Tell me, sir. Do you have a positive return from the project? Do you have a positive return from the project? No. When you see return in FM, it has not recovered your investment. I never said it is an interest received. I said, sir, 1 lakh invested, 30,000 received. So again, the project is not beneficial for you, isn't it? 1 lakh is invested, only 30,000 received. So it will show a negative IRR. Real time, you can see the IRR right now is what? Negative 70%. IRR for this project is right now negative 70%. Assume that next year there is another 40,000 received. Third year, assume that 25,000 received. Fourth year, 35,000 received. 35,000. 1 second. Fifth year, 12,000 received. So what is your IRR from the project? The IRR from the project, there is a 5-year project. You invested 1 lakh. You received 30, 40, 25, 35, 12. Okay. So the IRR, the internal rate of return, what is your return? If someone asks you, what is your return is 14.42%. 14.42%. Is that point clear? %14.42%. So coming back. See. So what I'm trying to do is, I'm trying to explain the rate implied by cash flows. I'm trying to explain this particular terminology, the rate implied by cash flows. So I have to identify my cash flows. What were my cash flows? Sir, year 0, I invested 1 lakh rupees. Year 1, I received how much? 30,000 rupees. Year 2, I received how much? 40,000 rupees. Year 3, I received how much? 25,000 rupees. Year 4, I received how much? 35,000 rupees. And year 5, I received how much? 12,000. So what is the total amount that I've received? 30 plus 40 plus 25 plus 35 plus 12,000. I got it. So in total, I've received rupees 1 lakh 42. I received 142. I invested 1 lakh. So if someone asks you to compute what is your return, I can say my return is what? In INR terms, I know 42,000 more I've received. I've received 42,000 excess, isn't it? My return is I invested 1 lakh, but I received 142. So what is my return? 42,000. But there is a problem. There is a concept of time value of money. There is a concept of time value of money. Investment happened at year 0 and received happened at over a period of time, isn't it? Okay. So whatever, let me ignore time value of money. Now, at least I know that in rupee terms, I have a 42,000. Now, this return is in rupee terms. This is in rupee terms. No, I don't want rupee terms. I want percentage terms. I want percentage terms. So, ignoring time value of money, how do you do the return? Ignoring time value of money, what is a percentage return? Sir, I have invested, I got 42,000 for 1 lakh rupees received. So 42 for 1 lakh rupees into 100. If I simply do, I'll get what? 42%. Isn't it? True. Now this return is not per annum. This 42% is return for 5 years in total. Tell me, am I right? This return is for 5 years in total. I said 42,000 is not a return each year. I'm not getting 42,000 every year. I'm getting for the project for 5 years, the return is what? 42,000. But we know that interest is always expressed per annum. Tell me, yes or no? Interest is generally expressed per annum. So I don't want to say that my return is 42,000 per annum. I want to express that per annum basis. So simply if I say, sir, 42,000, 42% divided by 5, 8.4, 8.4. Now there is a problem. This does not take into consideration whatever that you have computed right now. You are comparing 42,000 with 1 lakh. You are ignoring time value of money and you are saying it is a return of 8.4% or 42%. So time value of money is not given importance in this computation. Are you able to get it? Time value of money is not given importance in this particular computation. So this is not how we do it. This is not how we do it in our FM. We say that IRR and NPV is concept that takes care of time value of money. That takes care of time value of money. So how do I do that? Sir, I know that at some rate, if I discount all these inflows, if at some rate, if I discount all these inflows, I want the present value of cash inflow to be how much? I want the present value of cash inflow to be how much? Can you tell me? At some rate, if I discount all these inflows, I want the present value of cash inflows to be how much? I want the present value of cash inflows to be how much? 1 lakh. So at that rate, the rate at which present value of inflow is equal to present value of outflow is known as IRR. It is that rate at which present value of inflow is equal to present value of outflow. Present value of inflow is equal to present value of outflow. Present value of inflow equal to present value of outflow. Have you understood? Just think about it. I'll just give you 2 minutes time. I'll give you 2 minutes time. The rate at which present value of inflow equal to present value of outflow is known as IRR. The rate at which present value of inflow equal to present value of outflow is known as IRR. I don't know that rate, but I have to compute that rate. In CA Ind AS, you have computed that. You have learned how to compute that particular rate. Exactly that is what is required at CA. Final also. Can you give me a confirmation? Have you understood this concept? Okay. Now let's see. We got the IRR to be what? 1 second, please. We got the IRR to be what? In our Excel, we got IRR to be what? 14.42. So can we see whether if I discount all the cash flows, at 14.42, what will be my present value of inflow? Can we cross verify? If I discount all my cash flows, can I cross verify what is going to be present value of inflow? I said at 14.42, it should be what? 1 lakh. Let's do it. Can anyone tell me what is the first year factor? 14.42027. What is the first year factor? 14.42027. What is the first year factor? 1 divided by 1.1442. 027. What is the first year factor? Chat box. What is the first year factor? Is it point? No. Okay, I've taken full digits. Okay, I've taken full digits. Maybe rounding off. I've got 0.8739. I've got 0.8739. I don't think so. 0.96 is correct, and Farzana's answer is also not correct. It's 1 divided by. Tell me. 1 divided by. See, I've written 1 divided by 30,000. These are our cash flow 1. Cash flow 1. Cash flow 2. Cash flow 3. Cash flow 4. We have cash flow 5. Okay, I've taken all the cash flows. These are my discount factors. Tell me, sir, what is my present value? What is my present value? You can cross verify. These are our factors. I've taken it 14.4207. I've taken 14.4207. Now, if you do that, am I getting present value to be 1 lakh? Am I getting the present value to be 1 lakh? Am I getting the present value to be 1 lakh? Yes. So this is IRR, the rate implied by cash flows. The rate implied by cash flows. Now come to the concept again. Now I want everyone to think straight and tell me the answer now. Sir, I'm issuing equity shares or I'm issuing debentures. I'm issuing debentures. I'm issuing debentures. I want everyone to concentrate hard and tell me you are issuing debentures at 1 lakh rupees. Now, issuing debentures, is that an inflow or outflow? I'm issuing debentures at 1 lakh rupees. Is that an inflow or outflow? Inflow. So I'm writing it as inflow. 10%. 10% is your debenture. So each year, how much interest you will have to pay? Each year, how much interest you will have to pay? Each year, how much interest you will have to pay? 10,000. Inflow or outflow? Inflow or outflow? Tell me whether it is an inflow or outflow. Outflow 10,000. 5-year debenture. Second year also 10,000. Third year also 10,000. Fourth year also 10,000. Fifth year also 10,000. And fifth year, is there only interest alone? Is there only interest alone? Fifth year, is there only interest payment alone? Or is there a redemption also? Redemption. Assume redemption at par. Assume redemption is at par. Assume redemption is at par. So how much I have to repay? How much more will I have to repay? So in total 1 lakh 10. So 1 lakh again I have to repay. 1 lakh again. So in total, now you tell me what will be my IRR. If you do IRR, it will be exactly 10%. Can you see that? It will be exactly 10%. Interest, because there is no other cost. The only cost is what? In this story, the only cost was interest. There was no issue cost. So the cost to the company is only interest. Earlier you said when I'm issuing debentures, there could be 2 costs. One issue cost will be there as well as interest cost is there. But in this story, you have only which cost? In this story, you have only which cost? Interest alone. So it is perfectly pairing. It is perfectly pairing. Clear? Have you understood that you got IRR to be 10%? IRR was equal to your interest rate. Now my next question. You issued debentures, 1 lakh rupees, I accept. But to issue debenture, you had to incur 2,000 rupees cost. To issue debenture, you had to incur 2,000 rupees cost. So this cash flow, where should I write? This 2,000 rupees additional cost, where should I write? Year 0, 1, 2, 3, 4, 5. Where should I write? Very good, Sri Lakshmi. Year 0. Inflow or outflow? You tell me, is that an inflow or outflow? Inflow or outflow? Outflow. So I received 1 lakh. I accept. I received 1 lakh, but I had to incur 2,000 outflow. Now everyone tell me, in percentage terms, is your cost going to increase or cost going to decrease? If there is an issue cost, the KD, is that going to increase or is that going to decrease? KD, is that going to increase or is that going to decrease? Very good. Let's see. So instead of 1 lakh rupees, I'm making it what? Instead of 1 lakh rupees, I'm making it what? Shinid, I think there is a mistake. Whenever you are incurring additional cost, your percentage cost will increase, no? Interest is a cost. To that, there is an issue cost. So it is an additional burden. The cost of capital, KD, will have to increase. Okay, now let's see. I've made it 98. What is my cost? Everybody see. From 10%, it jumped to. From 10%, it jumped to 10.53. 10.53. Now, I think this is what Farzana was trying to help compute with the help of a formula. Now, Farzana, can you give out that, copy or paste that formula in the chat box for the benefit of each and everyone? Can you give that formula? You have already given me a formula. That was correct. We'll do that formula discussion and try to compute the answer. Whatever formula that you wrote was correct. Can you type it one more time so that others can also see? Now, see, there was a formula. At least this was the formula that you have taken for KD. For KD. The formula that was given is, sir, interest. For the time being, I'm not taking 1 minus tax because I haven't brought any tax into the picture. So ignore tax. So interest is there. Divided by, I think D means the issue price. I think maybe issue price. Issue price. So this was the formula given to me earlier. The formula. We'll customize this formula. So in my first story, story 1, I issued debentures at what amount? 1 lakh. And I have to pay interest 10,000. Is the number line okay? Now, if I apply this formula, what is the formula given by Farzana? Sir, interest is 10,000. Divided by what is the issue price? 1 lakh. Into 100. What is the answer? 10%. What is the answer? 10%. Are we getting the answer with the help of the formula? Sir, there is an interest of 10,000. Issue price was 1 lakh. And I got the answer to be what? 10%. Clear? Now let's apply the same formula in the second story. What was story number 2? Tell me, how's the number line? Sir, 1 lakh received. But there is an issue cost of how much? 2,000. And 10,000. 10,000. 10,000. 10,000. 10,000. Followed by, I have to repay 1 lakh. No, our answer was how much? I think our answer was 10.53. Now let's see, let's put into the formula. What is the formula? Sir, 10,000 divided by, here she has updated the formula. She says that, sir, you have to reduce the issue cost. It becomes 98. 1 lakh minus. So formula, if everyone can see the formula, what is typed in the chat box, you can see that. So 10,000 divided by 98 into 100. What is my answer? It is 10.2. It is not perfect. The answer is not perfect. The answer is not perfect. Clear? So how to go about with such scenario? Whatever she said is correct only. She wanted to increase the rate. She wanted to increase the rate so that she reduce the denominator. If you reduce the denominator, then what happens? Automatically the rate will increase. Think mathematically. I want my rate answer to go up. So what can I do? If I reduce my denominator, definitely my answer will go up. So from 10%, it became 10.2. But this is not the formula. This formula, this needs to be updated. This is not the formula. The formula may be that you have come across is interest plus redemption value minus P net divided by N, the whole divided by redemption value plus P net divided by 2. I think this is the formula, isn't it, Farzana? This was the formula. There are two parts for the numerator. Earlier also, actually, she applied this formula. But what happened is, in the previous story, interest was there, redemption value was 1 lakh, issue price was also 1 lakh. So 1 lakh minus 1 lakh divided by 5. The whole divided by 1 lakh plus 1 lakh divided by 2. So finally, the formula looked like interest divided by 1 lakh. I want everyone to say whether you are able to understand. Now, whatever formula that I've written, this is the formula that you would have learned in. This is the formula. I repeat, this is the formula that you have learned in your CA intermediate. Whatever formula Farzana has given is a miniature version that is will hold good only for the first story. Is a miniature version that will hold good only for first story. Why? Because this part gets knocked out, and 1 lakh plus 1 lakh divided by 2 is nothing but 1 lakh. Averaging is not required. Have you all understood? So this is an approximate formula. It's an approximate formula. Now let's apply into this formula. What is the interest? 10,000. What is the redemption value? Sir, 1 lakh. What is the P net, issue price net? 98,000. So I'm paying. Why do I do this? Because I want to get per annum. So 2,000 rupees I've paid for put together for 5 years. So divided by 5. The whole divided by 1 lakh plus 98,000 divided by 2. Now tell me, what is the answer? 1 lakh minus 98, it is 2,000 divided by 5, 400. So 10,000 plus 400, the whole divided by 99. So 10,400 divided by 99,000 into 100. So what is the answer? 10.505%. 10.505%. Now this is almost 10.505%. It is somewhere near to the answer that we got. Our accurate answer was 10.534%, isn't it? So approximate answer will never give you the perfect answer. It will bring the answer close to your actual answer. So this is the technique. This is the formula that you have learned in CA intermediate for computing KD, for computing KD, for computing KD. Now I'm going to bring another story. You have to tell me. You have to tell me what is going to be the answer. Tell me, sir. Assume if this debentures are repayable at premium. Now the redemption happened at what price? Assume that I'm ignoring transaction cost. You have issued at 1 lakh itself. But the redemption happens at a premium. Redemption happens at a premium. Assume 5% premium. 5% premium. Now can you tell me, so what will be your year 5 cash flow? Year 5 cash flow. If 5% premium, can you tell me what is year 5 cash flow? 5% premium. Can you tell me what is year 5 cash flow? So 1 lakh 5 is redemption is there plus 10,000 put together 1 lakh 15. Now see, what is my cost? If debentures are issued at a premium, tell me, is that increasing your cost of debt? If debentures are issued at a premium, can you see that? Is that increasing your cost of debt? Now let's try to apply into the formula. The formula that you have just seen. The formula that you have just, I want everyone to apply into the formula. What is the formula? Sir, interest. What is the interest? 10,000. Plus, what is the redemption value? 1,05,000. What is the issue price? 1 lakh. So 5,000 rupees additionally we are paying for 5 years. So there is an additional burden of 5,000, which is not per annum. That 5,000 you have paid over a period of 5 years only, isn't it? That is an additional cost for 5 years, not cost per year, but 10,000 is a cost each year. Are you able to get? So 10,000 I'm not dividing by 5. Why I'm not dividing 10,000 by 5? Can you tell me the reason why I'm not dividing 10,000 by 5? Can you tell me the reason why I'm not dividing 10,000 by 5? Because 10,000 is not an amount that is paid for one. It is there for all the 5 years. So 10,000 is enough. So 5,000 is an additional burden for 5 years. So divided by 5. The whole divided by redemption value plus 1 lakh divided by 2. Can you give me what is my KD? Cost of debt. If debentures issued at or redeemed at 5% premium. So numerator is what? 10,000 plus 1,000, the whole divided by what is the answer? What is the answer? 10.73%. 10.73%. Whereas the perfect answer that we have already got, what is the correct answer? If you apply IRR technique, what is the correct answer? If you apply IRR technique, what is the correct answer? 10.8. 10.8. So whatever formula that you are using right now is an approximate answer. It gives only an approximate. And again, actually, I've taught you one part. Assume if this was SFM, I've taught you what? Yield to maturity of a bond. I've done yield to maturity of a bond. At least in paper 2, this formula is there. This is known as YTM of a bond. YTM of a bond. Yield to maturity of a bond. Now I'm discussing from the point of view of what? Issuer. Now, if you discuss this from the point of view of the investor, for me it is cost. For the investor it is return. You call it as yield to maturity. Do you get that? So there are two paper discussion that is happening. Now I was discussing FM, that is cost of issuing debentures. If some person invested in this debenture, for him it is going to be returned. The same concept is there, same formula is there. It is known as yield to maturity. It is never known as cost, because for the issuer it is cost. For the investor it is return. Respond please. The same concept, the same thing. Whatever IRR that I'm discussing right now, KD that I'm discussing right now is yield to maturity of a bond. Yield to maturity of a bond, which is part of your CA final SFM, bond valuation. Okay. So that way, approximate, again, it gives only an approximate answer. The correct answer is using whatever. Now I've used Excel. For you, it is trial and error. You always try at 10%, you won't get the answer. You trial at 15% and you interpolate and get the answer. Now my next question is, if I bring an issue cost here, if I bring an issue cost 2,000, is my cost going to increase? To this question, if I bring an issue cost of 2,000, is my cost 10.8? Is that going to increase? Yes or no? Yes, because sir, I have received only 98,000. For 98,000 only, I am paying 10,000 interest. So my cost is going to increase to what amount? 10.34. My cost is going to increase to what amount? 10.34. Now I am saying that, sir, it is not issued at face value. It is issued at a discount. Assume that there is a discount of 5,000. Tell me, sir, if debentures are issued at a discount, isn't that an additional cost to the company? I want everyone to think. If debentures are issued at a discount, how do you say it is an additional cost? How do you say it is an additional cost? How do you say? Can anyone explain? Yes. Very good. Inflow is less. Sir, I received only how much? Sir, I received only 95,000. But I have to pay interest how much? 10,000. So this 10,000 interest is paid for 95,000 of loan. Feel like that. See, earlier I said I received a loan of 1 lakh and I paid interest of 10,000. So it is 10%. Now what is happening? In substance, you have received only 95,000 and you are paying 10,000. So actually, what is your interest? 10,000 divided by 95,000. You can see that interest would have increased. Respond. You are receiving lower amount and you are paying 10,000. That means your interest rate is not 10%. It is more than 10%. Is this point clear? If I receive 1 lakh and I pay 10,000, I know my interest is 10%, but I received only 95. So in this story, if I bring 5,000 as a discount on issue, what will happen to my answer? Everybody see what is going to happen to my answer. My inflow is only 93. My KD is going to be how much? 12.75. My KD is going to be what? 12.75. Now this concept is known as, see this. Now we'll come to the discussion. Relevant. So all this concept, everything KD over, I'm coming to accounting. Tell me, what is the journal entry? This is the story. Assume that 10% debentures, face value, rupees 1 lakh, issued at 5% discount. Issue cost rupees 2,000. Term 5 years. Redeemable at premium. What was the premium? 5,000 at 5%. Tell me, sir, as per your CA intermediate, what is your accounting? What is issue journal entry? Debenture issue, what is the journal entry? For you, the issue journal entry is like this. Sir, bank account debit. I have received only how much? Transaction cost, you are going to take it to separate journal entry. So bank account 95. Discount on issue 5,000. Loss on redemption or loss on issue 5,000. 2. 10% debentures. 2. Premium on redemption. Tell me, is this your journal entry or is this the journal entry that you have learned in your school? Bank account, discount account, loss, 10%, debentures, premium on redemption. Not over. One more journal entry is there. Issue expense to bank. How much? 2,000. What will happen in P&L? First year P&L. P&L, there is a issue expense. Or sometimes if this issue expense is a huge amount, you take it as a deferred revenue expenditure. In balance sheet itself, you will be showing it as a deferred revenue expense, preliminary expense like in balance sheet. In miscellaneous expenditure, you will be showing discount, loss, and debenture issue cost. All these items will be there inside asset side. And it will be amortized. It will be written off over a period of 5 years. It will be written off over a period of 5 years. And each year there will be interest how much? Each year interest to P&L how much? Each year interest to P&L how much? 10,000. Tell me, sir. But it is not 10,000 actually. P&L burden is not 10,000. You have to write off. Plus, you have to write off that loss, discount, issue cost. So in put together how much? 5,000 plus 5,000, 10,000 plus 2,000, 12,000 is there. So you'll be writing off 12,000 divided by 5. How much? So each year 2,400, 2,400, 2,400, 2,400, 2,400. So what is your total P&L burden? What is the total P&L burden over a period of 5 years? What is the total cost? Total cost associated with issuing debentures. Total cost associated with issuing debentures 62,000. 62,000. Have you all understood? The total cost associated with issuing debenture is equal to 62,000. Is that point clear? The total cost associated with issuing debenture is equal to 62,000. This is your journal entry that you have done in your previous stages of accounting discussion, isn't it? Now let's see. What does Ind AS say? Ind AS say that, sir, interest will have to be recognized. Interest to be recognized using effective interest rate. Using which rate? Not at coupon rate. Not at coupon rate. It has to be at effective rate. So what do you mean by effective rate? Sir, effective rate means you have to consider interest. You have to consider issue cost. You have to consider discount. You have to consider premium. I have to identify a rate which captures all this. In our example, the rate that captured all this was 12.753. 12.753. 12.753. And what is your journal entry? Sir, bank account debit. How much did I receive in hand? Can anyone tell me? How much did I received in hand after discount and issue cost? 93. Over. This is the journal entry. And this debenture is a liability because it's an obligation to pay. It is an obligation to pay interest as well as it is an obligation to pay redemption. It is 100% liability. And what you have to do? Now you have to amortize. So we have to do an amortization table or repayment table. So what is your opening liability? Your interest will be computed at which rate? 12.753%. And cash flows, the closing. Tell me what is your opening liability? For those people who have learned hire purchase, now this table will be clear. CA Ind AS, hire purchase. Have you learned this amortization table, repayment schedule? Exactly same table we are going to do it. What is your opening liability? What is your opening liability? 93,000. Can you tell me what are the cash flows? Can you tell me what are the cash flows? Can you tell me what are the cash flows? First year, 10,000. Second year also 10,000. Third year, 10,000. Fourth year, 10,000. Fifth year, what was the cash flow? Fifth year, 10,000 was there and 105. So 115. So if 5 cash flows are properly done, my closing will have to be nil. My closing will have to be nil. Tell me yes or no. Are you able to follow this? So I start with 93. I pay 10,000, 10,000, 10,000, 10,000 and 115. My closing will have to be nil. Can you give me your confirmation? Okay. Now help me out to construct this table. So what is the first year interest? 93,000 into 12.753%. What? One one 860. 11860. 11860. So can you tell me what is closing? 93,000. Add interest 11860. And you repaid only 10,000. So what is closing? 94,860. Please respond. 93,000, 11860, 10,000, 94,860. How am I getting it? Sir, to this 93, add this interest accrued. From that, reduce whatever is the payment. So opening plus interest minus cash flow will give you closing. Please give your response in the chat box. Now, what is the second year? Sir, 94,860 into 12.753%. How much? 12,097. 94,860 plus 12097 minus 10,000. How much? 96,957. 96,957. Is that okay? Third year. 96,957 into 12.753%. One, 2, 3, 6, 5. 1, 2, 3, 6, 5. So 96,957 plus 1, 2, 3, 6, 5 minus 10,000 will give you 99,322. Next year it is 99,322 into 12.753%. How much? 12,667. It is 101,989. 101,989. Last year alone, I want the figure to be nil. Hence, I am writing from right side to left side. So can you tell me what should be the interest balance in figure? I want it to be nil. I don't want to bring that approximation mistake. So minus 115 is equal to 13011. 13011. Can you please confirm? Can you guys please confirm 13011? Sir, why, sir? I've written just like I've written Arabic. I'll be writing from right to left. Why? Because I just wanted to approximate that interest. Now, can you add all those interests put together? Can you add all those interests put together, that interest column in total? Can you please add and tell me what is the amount? 11860 plus 12097 plus 12365 plus 12667 plus 13011. What is the amount? Please add. What is the amount? Did you get the exact same 62,000? Earlier, we used to show interest to be what? Earlier, we used to show interest to be 10,000, 10,000, 10,000, 10,000, and write-off to be 2,400, 2,400. You have done a straight lining. Now, considering time value of money, you're saying that, sir, first year it should be 11,000. Second year it should be 12,000. Like that, you have done. And final answer is 62. This is how you should be doing the accounting. This is how you should be doing the accounting. Are you able to get it? So there is no concept of, I repeat, one important thing that I'm discussing. Sir, as per Ind AS, there is no concept of miscellaneous expenditure. As per Ind AS, there is no concept of miscellaneous expenditure. There is nothing like discount, loss on issue. Such item will never be there. And all these things will be factored into which? This discount and loss, everything will be factored into your effective rate. The rate from 10%, it will increase to 12%. So it will be factored into effective interest rate and it won't be there in balance sheet. Are you able to get? So when you prepare an asset side, you don't have the heading miscellaneous expenditure. Why? Because there is no need to present a miscellaneous expenditure. It is being factored into which? Right? Those items, these are items that increases your cost of borrowing. That has been factored into your interest rate. Are you able to get this logic? Discount and premium, all those things has been factored into your interest rate. And this is already you have learned. You have already learned this formula. You have already learned. Now let's see what is the formula that you will be doing in your CA Inter KD. Sir, interest 10,000. What is the redemption value? Sir, redemption value is equal to 105. Issue proceeds net of all those things 93 divided by 5. The whole divided by 105 plus 93 divided by 2. Tell me what is the answer? $10,000 plus 2,400. $99,000. So what is your approximate answer, KD? Approximate answer, cost of debt. $12.525. 12.525. As per Excel, we got 12.753. Now, see this. Now, if I want to do that repayment table, please. What is my interest? Let me write my interest. What is the actual interest? 12 point, sorry. $12.753. Okay. I'll write the opening liability. What was the opening liability? 93,000. And what are the cash flows? 10,000. Each year the cash flow will be 10,000. If I keep the cash flow to be 10,000, now you see this, please, this alone. See that my liability from 93,000, it is increasing to 1,05,000 because my final redemption happens at 1,05,000. Can you see that? From 93,000, my liability starts at 93,000. My liability starts at 93,000 and it has to increase to 105 because that is when you pay the 1,05,000 and becomes zero. It becomes zero. Can you see that? Now, if I show this amount, instead of 10,000, if I add 105, then it becomes zero. The closing becomes zero. The closing, there is a slight 4 rupees rounding off, it becomes zero. So whichever way you want to take, you want to keep 0 or you want to give. Now I'm keeping it as this table. Can you see that? This is the table that you have constructed. This is the repayment opening liability. Each year it started increasing. And this is known as amortized cost. This closing balance is known as amortized cost. Amortized cost. You are amortizing the cost of issuing that debentures. Whatever cost is getting slowly added, because there are various costs. Discount is a cost, premium is a cost, issue cost is there. All those things getting added to your burden, and finally you have to repay 105. Finally, repayment happens. And what is the total interest? If you add all these interest, it will be the 62,000. Here there is a 4 rupees difference. It will be 62,000. Are you able to get? Are you able to get? So coming, if you have understood this concept, everything what we are trying to do is, sir, substance of the transaction is given more importance. You have received only 93 means show a loan of only 93. Don't show a liability of 1 lakh. There is no concept of face value and all. That is only in Companies Act, you have a concept of face value, all those things. For accounting, there is no concept of face value, all those things. Now see this. Let's come to our book. Let's come to question 2. What is question 2? A Limited had taken a loan of rupees 1 lakh at 10% interest. Loan is repaid over 5 years. Your equated yearly installment is what? 26,380. How should the loan be disclosed in balance sheet? How it should be disclosed in balance sheet? Now tell me, sir, should you do the accounting based on this 10%, or should you do the accounting based on effective interest rate? Should you do the accounting based on 10% or should you do the accounting based on effective interest rate? What are your thoughts? Now this is a pure liability. This instrument is a pure liability. Bank loan, it is a pure liability. Should you do the accounting based on 10% or should you do the accounting based on effective interest rate? Tell me. Effective interest rate. So what is your first step? What is your first step? What is your first step? Is to determine, is to compute your IRR or your effective interest rate. To compute your IRR, what do you require? To compute your IRR, what do you require? Can anyone tell me, to compute your IRR, what do you require? To compute your IRR, what do you require? I'll show that sentence. You read that particular sentence, whatever I've written. What do you require? I have highlighted here. What do you require? What do you require? To compute your IRR or EIR, what do you require? You don't require anything. You require cash flows. You need to know what are the cash flows associated with that contract. You need to identify the cash flows associated with the contract. Now, can you tell me what is the cash flow associated with this particular loan contract? Can anyone tell me what are the cash flows associated with this loan contract? Can anyone tell me what are the cash flows associated with this loan contract? Year 0, inflow or outflow? Inflow or outflow? Year 0, inflow or outflow? Inflow, how much inflow? How much inflow? 1 lakh inflow. Very good. Year 1, 2, 3, 4, 5. Inflow or outflow? Year 1, 2, 3, 4, 5. Inflow or outflow? Outflow, how much? Outflow, how much? So far, so good. Perfect. So far, so good. Perfect. What is the outflow? Year 1, to read the question and tell me what is the outflow. Year 1, 2, 3, 4, 5. What is the outflow? Read, it is there in the 2 sentence written. Equated yearly installment. That means you have to repay. You have taken a loan each year. You have to pay 26,380. 26,380. Isn't it, Farzana? You are not paying 10,000. You are paying 26,380. It includes interest, everything. Equated yearly installment. So what is my first step? Is to identify IRR. So tell me, I'm going to put into my IRR table. What is the first year? Inflow. Year 0, 1 lakh. Outflow is how much? 26,380. Each year 26,380. There is no separate redemption and all. So can you tell me what is your IRR? Can you tell me what is your IRR? Why IRR is exactly same as 10%? Can anyone tell me why IRR is exactly same as 10%? Can anyone tell me why IRR is exactly same as 10%? Sir, there are no other costs. And with respect to loan, there is nothing like, sir, discount and premium is a terminology associated with debentures. You don't have that concept with loan, isn't it? There is nothing like a loan issued at a discount, loan repayable at a premium. So there is no issue cost, only interest is there. Hence it is 10%. Now, if it is 10%, will we be able to prepare our amortization table? Yes. Now see that we have already prepared the amortization table and this is there in your textbook. Okay. Tell me, at what rate? At 10% itself. At 10% itself. At 10%. Here IRR is equal to your interest rate because no other cost. IRR is equal to your interest rate because there is no other cost. Now, are you able to feel it? Since there is no other cost, IRR is exactly same. So that is how you slowly pick the subject. If there is some transaction cost or some discount premium, then obviously we have to compute IRR. Here IRR computation was not there. Now, if I do that, tell me, sir, what is my opening liability? 1 lakh. What is my interest? 10,000. First year, how much did I repay? 26,380. Therefore, what is my closing liability? 83. Next year, 83. Interest, cash flow, and finally, the loan becomes zero at the end of 5 years. Can you, I'll give you 2 minutes time. Can you confirm the table? See whether it is right or wrong. And in another 2 or 3 days, you are going to get this book. So need not worry. Everything will be there in your book. Clear? But in case if you want to scribble and write in your notebook, you can do all those. Lecture notes, you can very well, you can do whatever I've discussed. If you want to write as a lecture note, you can do it. Otherwise, everything will be there in your copy given to you. So I'll give you 2 minutes time. Can you guys please confirm whether the table is correct? The table is correct because I've done an Excel working only. It's formulas. So the moment I give the first figures, everything will be automatically tallying. But to have a first-hand idea, if you want to write, you can write. Or if you want to cross-check and see in your calculator, you can cross-check and see. Take 2 minutes time and ensure that you're comfortable with the table. Actually, the table is nothing new to you guys because you have already, if you have learned from me in intermediate, I've taught you this particular table for hire purchase, isn't it? How many of you have attended classes from me for intermediate? Anyone who have attended classes from me for intermediate? We would have done this table a number of times. So we have done this table. It is exactly there in intermediate. The same table is what? So it's a continuation. So others, take around 2 minutes time and please give me your confirmation. Once I get your confirmation, I will push forward. Once I get your confirmation, I will push forward. So Farzana is comfortable. She has confirmed. She's okay. Perfect. So that way. So what will be the journal entry? When I take a bank loan, sir, cash account debit to bank loan, and each year interest will get accrued at 10%. Now, this is how you do, and this is your closing loan. This is your closing loan. Now, what is required is for the purpose of my balance sheet, assume it is the end of year 1. If I draw a balance sheet, non-current liabilities, say assume bank loan, term loan, you have a bank loan. How much? My closing value at the end of year 1 was 83,620. But as per schedule 3 format, they say that out of this, some portion should be written under current liabilities, current maturities of long-term debts. Current maturities of long-term debt. So you have to split this loan into 2 parts. How much is non-current and how much is current? You have to present into all these things you will be doing in your real life also with respect to audit. There's nothing new. So how do you do that? So how do I do that is like this. Sir, out of this 65,000, tell me, this 65,000, this will be non-current. And the difference between 83 and 65 will be current. The difference between, so can you tell me what is that split? 83 is the closing value of loan, closing book value of loan 83. Out of that, non-current is equal to 65. So can you give me what is the balancing figure? Can you give me what is the balancing figure? Now, what is this 18,000? Maybe few people will have a doubt. Sir, next year I have to pay 26,000. Yes. In another 1 year time, you have to pay 26,000. But 26,000 includes what? 26,000 includes interest. Now it is 31st March. Interest will be due only after 1 year. So out of this 26,000, if you can remove this 8362, reduce. 26 is the payment. 26,380 is the payment that you have to make in 1 year, but that includes interest, which is not due. So if I reduce that interest of 8362, what will I get? 26,380 minus 8362. What will you get? 18018. Is that okay? So what is this? So principal portion payable in upcoming installment is the current maturity. Principal portion payable in the upcoming installment. So upcoming installment is what? Upcoming installment is how much? 26,380. Inside that, the principal portion is how much? Or inside that interest, I am reducing. Interest, if I reduce 8362, I'll get principal portion. That is 18018. Are you comfortable? 18018. So have you understood that every long-term liability, because any amount that has to be paid during the next 1 year, within that next 1 year, will have to be shown as a current liability. And beyond that will be shown as a non-current liability. So how do you do this split? Prepare the table. Now it is 83. The next year closing balance will be non-current, the difference. Or you can say out of the next total cash flow, reduce the interest. out of the next total cash flow, reduce the interest. Have you understood this? How to split the bank loan into current and non-current? How to split bank loan into current and non-current? Total closing, we have prepared an amortization table. How to split into current and non-current? Have you understood? Now, can anyone give me what is this answer? Loan is taken on 31st March. Loan is taken on 31st March. That is year end. The loan is taken on 31st March, year end. Can you tell me how much is current and non-current? So what is the book value of loan? Book value of loan is entire 1 lakh. Tell me what is current and how much is non-current. Book value is 1 lakh. So how are you going to do it? I'll be keeping the table for your reference. I've kept the table for your reference. The loan amount is 1 lakh. So how much is current and how much is non-current? You have taken loan at the fag end of the year. On 31st March only you have taken loan. Sri Lakshmi, can you tell me why did you get 26,380 as current? What is that 26,380? 26,380 is the total cash flow to be made. This includes principal and interest. This includes principal and interest, isn't it? Interest should not be considered. That cash flow out of that principal portion is what? 16,000. Bhavana has given the answer. 16,380. 16,380. Isn't it? Sir, 26 is the amount that I have to repay in the next 1 year. But that repayment, first of all, interest will have to get, interest will become due only after 1 year. So out of the 26, 10,000 will become due only at on a passage of time. But now interest is not due. You cannot take interest. Is that okay? So 26 is the next payment. But out of that payment, what is the principal portion? How do you do that? From this 26, reduce 10,000. So 16. $380. So it is 83. 620. It is 83, 620. Have you understood this? If the amortization table is there, I repeat, it is like this. Sir, I get my closing value. What is closing value? What is closing value? Let's take first example itself. What is 83,000? Can anyone tell me what is this 83,000? 83,000 is nothing but present value of future cash flows. Present value of future cash flows. Let's do it. Let's do it. 83,000 is nothing but present value of future cash flows. See this. You are at the end of year 1. End of year 1. What are the future cash flows? 2, 3, 4, 5. What are the future cash flows? 26,380. 26,380. 26,380. 4 more cash flows. So what is the present value? Let's do it fast. It's an annuity. So can you give me what is the present value annuity factor at 10%, 4 years? It's a time value of money that is going on. 1 divided by 1.1. 1, 2, 3, 4 GT. 3.1698 into 26,380. So I get it is 83,621. Is that okay? So sir, this includes, I repeat, this includes 4 payments. Out of that 4 payments, this payment is to be paid within 12 months. But the problem is, to make that payment, 1 year has to expire. There should be a movement of 1 year. And during this 1 year only that interest will become accrued. So I cannot show 26 as a current outflow or current liability. Out of that, you have to eliminate due to time value of money. You have to eliminate what? Or else you have to say it is nothing but present value of 26,380. What is the present value of 26,380? That means I'm eliminating interest. 26,380 divided by 1.1. Remove that interest. Okay. Don't simply compute present value, then you won't get the answer. So what I'm trying to say is 26,380 includes a interest. Includes a interest, and interest. There are various interest included. 83,621. There is an interest on this installment. There is an interest on this installment. Interest on this installment, and interest on this installment. So out of this 83, there is an interest. What is that interest? 83,621 into 10%. 8362. So you have to reduce 8362. Only then you will be able to get principal portion outstanding. Is that okay? So whatever we are doing is just time value of money. That is nothing but fundamentals of FM. Is that clear? Can you give me confirmation? Is this time value of money the split between current and non-current? Is that clear? Those who are into last year of articleship, at least you would have done it in your real life also. Last year of articleship, maybe in your real life you would have done all this split, because it is there in AS also. Schedule 3, Division 1 also it is there. The split is required, isn't it? Not only in Ind AS also the split is there. Now, let's come to question number 4. What is question number 4? A Limited has taken a loan of 20,000 at 10% interest. Processing fee is 2,000. Now tell me, the moment you come across a processing fee, effective interest rate, will it be equal to 10%? Effective interest rate, will it be greater than 10%? Or effective interest rate, will it be less than 10%? What is your answer? Greater. So if you want to compute effective interest, what is your first step? What is the first step? If you want to compute IRR in capital budgeting, what is your first step? If you want to compute IRR in your capital budgeting, what is your first step? Is to identify all the cash flows. Is to identify. Tell me, sir, what is the year 0 cash flow? Can you tell me what is the year 0 cash flow? How much of loan you have received? You have received 20,000 rupees loan, but year 0 itself you have to pay 2,000. So what is the net amount received? Equated yearly installment is 5,000. So if I draw a number line, tell me how is the number line? You received 20. On that date itself, you paid how much? Processing fee 2,000. And year 1, 2, 3, 4. So 5,000. 5,000. 5,000. 5,000. 5,000. Now tell me, sir, how am I going to compute IRR? Year 0. So tell me year 0, what should I write? Year 0, what should I write? Cash flow. Year 0, what should I write? Cash flow. Year 0, 18,000. Very good. Year 1, 2, 3, 4, 5, how much? 5,000. So what is my AR? What is my IRR? What is my IRR? 12.05. Now you will have a doubt, sir. This is not fair. You are doing all the answer in Excel. We are not supposed to do it in Excel in examination. How can I do using Excel? Okay, not an issue. We'll do it. So give me the answer. What is that? At IRR. At IRR. Present value of inflow equal to present value of outflow. So I know that so my net cash flow year 0 is what? 18,000 is equal to 18,000 is equal to 5,000 into present value annuity factor R comma 5 years. Therefore, what is present value annuity factor? 18,000 divided by 5. How much? 18,000 divided by 5. Sorry, 5. No, 5,000 divided by 5,000. 3.6. So I want annuity factor to be 3.6. There are two techniques by which we can solve it, using table or using trial and error. You tell me which method you would like to do. Which method you would like to do? Annuity table or trial and error? Annuity method or trial and error? Which method you would like to do? Using table method or trial and error method? I know present value annuity factor R comma 5 years. R comma 5 years is equal to 3.6. Which method you would like to do? Do you like using table approach or you like using trial and error approach? Bhavana says table approach. Okay. So to apply table approach, first of all, we require what? We require what? Table. I am coming into which table? Annuity factor table. Present value annuity factor table. I know that against 5 years, against some rate, the answer will be what? 3.6. So I'm checking. 1% answer is 4. 10% answer is 3. No, so it is not 10%. Again, I have to increase my rate. So I'm going to the next rate. 12%. See, against 12%, what is my answer? Against 12% in my table, against 12%, 5 years, 3.6. Against 13%, answer is 3.5. So I know that my answer lies between, tell me, I know that my answer lies between 12%, it is 3.605. 13%, it is 3.517. But you want the answer to be what? I think you want the answer to be 3.6 exactly. So it lies between 13 and 12. So tell me, sir, interpolation. I'm going to do interpolation. What is delta rate? What is change in rate? From 12% to 13%, what is the movement? Can anyone tell me? I'm asking you, you have to give me the answer. From 12% to 13%, what is the change in rate? From 12% to 13%, what is the change in rate? 1%. So can you give me what is a change in present value? What is a change in present value annuity factor? Can anyone tell me what is the change in present value annuity factor from 3.605? It has moved to 3.517. Can anyone tell me what is the change in present value? What is the change in present value? From 3.605, it has moved to 3.517. Give me the answer. It is 0.088. It is 0.088. You tell me. You want the interest rate to change by what? X. Present value to change by what? Look into the blue color line and tell me you want the present value to change by what? Look into the blue color line and tell me you want the present value to change by what? 3.605 minus 3.6. 0.005. I don't want it to change by 3.6. I want it to change it to 3.6. Isn't it, Sri Lakshmi? I don't want it to change by 3.6. I want it to come to 3.6. So I want it to change by 0.005. 0.005. Isn't it? Can you confirm? From 3.605, I want the answer to be 3.6. So I want it to change by 0.005. So do the cross math, cross multiplication. 1 into 0.005 divided by 0.088. That is X. So what is the answer? X is equal to 0.056. So it is 12 plus 0.056. So what is the answer? 12.056%. So what is the IRR? 12.056%. 12.056%. Have you all understood? 12.056% IRR. 12.056% IRR. Have you understood? 12.056% is IRR. Have you guys understood? So my effective interest rate is what? 12.05%. If I get 12.05%, then at 12.005%, I've already prepared the table. My loan is 0. Now you will have to tell me how do I split the book value end of year 1, or tell me how you're going to show presentation at end of year 2. At the end of year 2, what is the book value? After that, we'll stop the discussion. At end of year 2, what is the book value of this loan? At the end of year 2, what is the book value of this loan? At end of year 2, what is the book value of this loan? From the table, can you tell me? At the end of year 2, what is the book value of this loan? $11, very good. 11,998. Out of that, can you tell me what is current and non-current? This 11,000 has to be split into 2, current and non-current. Can you tell me how much is current and non-current? So at the end of year 2, you are doing the audit and you are splitting it into current and non-current disclosure. So tell me what is current and non-current. Aradhi says current liability is 3544. 3544. Can you give me the math? I think she got 3544 as 5,000 minus 1446, isn't it? 5,000 is the next EMI payment. Out of that, 1446 is yet to fall due. So 3554. 3554 or 3544. 5,000 minus 1446. 3554. Isn't it, Ardi? 3554. And non-current is equal to 8444. 8444. 8444. Very good. So similarly, we have to do a lot of accounting that tomorrow we'll be doing it. So what we have tried to do is, let me recap. After that, we'll wind up. Now, so can one person please unmute who is having a stable internet connection? Can you unmute so that we can just converse and wrap it up? Anyone want to interact? Can you please unmute one person, one among you, if you are willing? So no volunteers? Then can I take a name? If there are no volunteers, can I take a name? Arati, is that okay for you to speak up?
Hello. Sir, can you hear me?
Yeah, please.
Okay, sir.
അപ്പൊ നമ്മൾ ഇന്ന് ബേസിക്കലി എന്താണ് പഠിച്ചത്? ആദ്യം നമ്മൾ പഠിച്ചത് ഏതൊക്കെ ടോപ്പിക്സ് പഠിക്കാനുണ്ട്, നമ്മുടെ സിലബസിൽ ഹെവി വെയിറ്റ് ഏതാണ്, ബാക്കിയുള്ള ചലഞ്ചിങ് ഇൻഡേസ് ഏതാണ്, ഇൻഡേസ് ആയിട്ട് കണക്ട് ചെയ്യാത്ത ഏതാണ്, അത് ഓക്കെയാണ്.
ഓക്കെയാണ് സർ.
പിന്നെ നമ്മൾ പഠിച്ചത് സബ്സ്റ്റൻസ് ഓവർ ഫോം ഇന്നലെ പറഞ്ഞിരുന്നു. സബ്സ്റ്റൻസ് ഓവർ ഫോം അവിടെ ഇന്ന് തിയറി പോലെ പറഞ്ഞു, സർ ഇത് ലയബിലിറ്റി ആണ്, ഇത് ഇക്വിറ്റി ആണെന്ന് പറഞ്ഞു. അപ്പൊ ചില ആളുടെ മനസ്സിലേക്ക് ഡൗട്ട് വന്നിട്ടുണ്ടാവും, സർ അപ്പൊ ഈ ലയബിലിറ്റി ഇക്വിറ്റി എന്താണ്, ഹൗ ഡു യു ഡു ദാറ്റ്? അപ്പൊ അതിനൊരു നമ്പർ ക്രഞ്ചിങ്ങിന് വേണ്ടി ആദ്യം വേണ്ടത് എഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ് എന്നുള്ള കോൺസെപ്റ്റാണ്. ഏതാ?
എഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ്.
അപ്പൊ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ് പഠിപ്പിക്കണമെങ്കിൽ നമ്മൾ ഒന്ന് FM-ലേക്ക് പോയി. കാരണം അവിടെ KD എന്ന് പറഞ്ഞ പേരിൽ പഠിച്ച സാധനമാണ് ഇവിടുത്തെ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ്. ശരിയല്ലേ?
അതെ സർ.
അവിടെ KD എന്ന് പറഞ്ഞു പഠിച്ചു. അവിടെ 2 മെത്തേഡ് ഉണ്ടായിരുന്നു, ഒരു ഫോർമുല അപ്രോച്ചും ഉണ്ടായിരുന്നു, IRR വെച്ച് കമ്പ്യൂട്ട് ചെയ്യുന്ന ടെക്നിക്കും ഉണ്ടായിരുന്നു. നമ്മളിവിടെ ഫോർമുല വെച്ചല്ല സോൾവ് ചെയ്യുന്നത്, നമ്മളെ IRR എന്നുള്ള ടെക്നിക്ക് വെച്ച് ഞാനിപ്പോ ഒരു ക്വസ്റ്റ്യനിൽ IRR, ബാക്കി 3 ഞാൻ ചെയ്തു, അത് എക്സെല്ലാ ചെയ്തത്. അത് എനിക്ക് എളുപ്പത്തിൽ ചെയ്യാൻ പറ്റും എക്സെൽ ഫോർമുല വെച്ച് ചെയ്തപ്പോ. ക്ലിയർ ആണോ?
അതെ സർ.
ഹോളിൽ നിങ്ങൾക്ക് എക്സൽ ഉപയോഗിക്കാൻ പറ്റില്ല. ഞാൻ എക്സൽ എന്തിനാ ഉപയോഗിച്ചതെന്ന് പറഞ്ഞാൽ എനിക്ക് റിയൽ ടൈം ആയിട്ട് മൂവ്മെന്റ്, ഫിഗേഴ്സിന്റെ മൂവ്മെന്റ് കാണിച്ചു തരാനാണ്. അറ്റ്ലീസ്റ്റ് എന്റെ ഉദ്ദേശം ഇത്രേ ഉണ്ടായിരുന്നുള്ളൂ, ഒരു അഡീഷണൽ കോസ്റ്റ് എലമെന്റ് വരുമ്പോൾ ഇൻട്രസ്റ്റ് റേറ്റ് കൂടുമെന്നും ആ എലമെന്റ് ഇല്ലെങ്കിൽ ഇൻട്രസ്റ്റ് റേറ്റ് കുറയുമെന്നും എന്നുള്ളൊരു തോട്ട് പ്രോസസ്. 100% പ്ലെയിൻ വാലിനെ ഇൻസ്ട്രുമെന്റ് ആണെങ്കിൽ ഇൻട്രസ്റ്റ് റേറ്റ് തന്നെയായിരിക്കും എഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ് ആണെന്നുള്ള കോൺസെപ്റ്റ്. അത് ഓക്കെയാണോ?
അതെ സർ, ഓക്കെയാണ്.
പ്രോസസിംഗ് ഫീയും ഇല്ല, ഡിസ്കൗണ്ടും ഇല്ല, പ്രീമിയവും ഇല്ല. അങ്ങനെയാണെങ്കിൽ 10% ഇൻട്രസ്റ്റ് തന്നെയായിരിക്കും എഫക്റ്റീവ് ഇൻട്രസ്റ്റ്. അതുകൊണ്ടാണ് ഫസ്റ്റ് ക്വസ്റ്റ്യൻ നമ്മൾ ചെയ്തപ്പോൾ ഞാൻ ഈ സ്റ്റെപ്പ് 1 എന്നൊന്നും പറഞ്ഞ് എഴുതിയില്ല. നോക്കിക്കേ, ഈ ക്വസ്റ്റ്യൻ 2 സ്റ്റെപ്പ് 1 ഐഡന്റിഫിക്കേഷൻ ഓഫ് ക്യാഷ് ഫ്ലോ എഴുതിയില്ല. കാരണം എന്താ? കാരണം അവിടെ പ്രോസസിംഗ് ഫീ ഒന്നും ഇല്ലാത്തത് കൊണ്ട് തന്നെ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് റേറ്റ് ഡയറക്റ്റ് ആയിട്ട് അക്സെപ്റ്റ് ചെയ്തു. ക്ലിയർ? രണ്ടാമത്തെ ക്വസ്റ്റ്യൻ ചെയ്തപ്പോൾ അവിടെ ഒരു പ്രോസസിംഗ് ഫീ വന്നതുകൊണ്ട് എനിക്ക് അങ്ങനെ അക്സെപ്റ്റ് ചെയ്യാൻ പറ്റിയില്ല. ഐ അണ്ടർസ്റ്റുഡ് മൈ ആൻസർ വിൽ ബി മോർ ദാൻ 10%. ശരിയല്ലേ? അപ്പൊ പിന്നെ നമ്മള് ഈ പറഞ്ഞ പോലെ ടേബിൾ വെച്ച് കാണിക്കാൻ പറഞ്ഞതുകൊണ്ട് ടേബിൾ വെച്ച് കാണിച്ചു. ടേബിൾ വച്ചില്ലെങ്കിൽ എങ്ങനെ ചെയ്യും? നമ്മൾ ആകെ ഇപ്പൊ 10% ആനുവിറ്റി എങ്ങനെയാ കമ്പ്യൂട്ട് ചെയ്യുക? 1 ഡിവൈഡഡ് ബൈ 1.1. 1, 2, 3, 4, 5 GT ഞെക്കി. എനിക്ക് കിട്ടിയ ആൻസർ 3.7 ആ. എനിക്ക് കിട്ടേണ്ട ആൻസർ 3.6 അല്ലേ?
അതെ സർ, 3.7
ആ വന്നത്. അപ്പൊ എന്റെ ട്രയൽ തെറ്റിപ്പോയി. ശരിയല്ലേ?
അതെ സർ.
അപ്പൊ എനിക്ക് 3.7 കുറയ്ക്കണമെങ്കിൽ റേറ്റ് കൂട്ടണം. അപ്പൊ ഞാൻ 11% എടുക്കും. 1 ഡിവൈഡ് ബൈ 1.1. 1, 2, 3, 4, 5 GT. എനിക്ക് 3.69 കിട്ടി. എന്ത് കിട്ടി?
3.69.
അപ്പൊ എനിക്ക് വേണ്ടത് 3.69 അല്ല വേണ്ടത്, 3.6 ആ വേണ്ടത്. അപ്പൊ റേറ്റ് ഒന്നും കൂടി കൂട്ടാം. 12 എടുത്തു. 1 ഡിവൈഡ് ബൈ 1.12. 1, 2, 3, 4, 5 GT. അപ്പൊ എനിക്ക് 3.604 കിട്ടി. എന്ത് കിട്ടി?
3.604.
ഇത് നമ്മുടെ FM-ൽ ചെയ്യുന്ന നമ്മുടെ പ്രസന്റ് വാല്യൂ കമ്പ്യൂട്ട് ചെയ്യുന്ന ഫിഗേഴ്സ്. ഓക്കെ ആണോ? വേണമെങ്കിൽ അവിടെ സ്റ്റോപ്പ് ചെയ്യാം. 3.604 is nothing but 3.6 itself. But 12% ആണെന്ന് മനസ്സിലായല്ലോ? പിന്നെ ആക്യുറേറ്റ് ആൻസറിന് വേണ്ടിയിട്ടാണ് പരീക്ഷകളിൽ എല്ലാ ആളുകളും 12 ചെയ്യുള്ളൂ. കാരണം ആക്യുറസിയുടെ പുറത്ത് പോകേണ്ട ആവശ്യമില്ല. അപ്രോക്സിമേഷൻ അലൗഡ് ആണ്. നമ്മൾ ടേബിൾ വരച്ചു. ടേബിളിനെ വരച്ചിട്ട് ഓരോ കൊല്ലത്തെ ലയബിലിറ്റി എത്രയാണെന്ന് കണ്ടെത്തി. പിന്നെ ഈ ഇൻസ്ട്രുമെന്റിന്റെ പ്രത്യേകത എന്താ? ഇത് 100% കാശ് കൊടുക്കാൻ ബാധ്യതയുള്ള ഇൻസ്ട്രുമെന്റാണ്. അപ്പൊ ഇതിൽ ഇക്വിറ്റി എന്ന് പറഞ്ഞ ഒന്നുമില്ല, ഇതിൽ ലയബിലിറ്റി മാത്രമേ ഉള്ളൂ. ഓക്കെ ആണോ? ലയബിലിറ്റി മാത്രം വന്നപ്പോൾ എന്റെ ബാലൻസ് ഷീറ്റിലെ ലയബിലിറ്റി വരും. ബട്ട് ഷെഡ്യൂൾ 3 അവരെന്താ പറയുന്നത്? ലയബിലിറ്റിനെ മൊത്തം ഒരു മുറിയിൽ കൊണ്ട് ഇടാനാണോ പറയുന്നത്, അതോ രണ്ടായിട്ട് പിരിച്ചിട്ട് എഴുതാനാണോ പറയുന്നത്?
രണ്ടായിട്ട് സെപ്പറേറ്റ് ചെയ്യാനാണ് സർ. കറണ്ട് ലയബിലിറ്റി ആൻഡ് നോൺ കറണ്ട് ലയബിലിറ്റി.
കറണ്ട് എന്ന് പറഞ്ഞാൽ അടുത്ത കൊല്ലം വരുന്ന എമൗണ്ടിനെ കറണ്ട് ആയിട്ടും അതിന് ശേഷം ഒരു കൊല്ലത്തിന് ശേഷം കഴിഞ്ഞ് വരുന്ന ഇതിനെയൊക്കെ നോൺ കറണ്ട് ആയിട്ട് സ്പ്ലിറ്റ് ചെയ്യണം എന്ന് പറഞ്ഞിട്ടല്ലേ? അങ്ങനെയാണെങ്കിൽ സ്പ്ലിറ്റ് ചെയ്യുമ്പോൾ EMI 5000 ആണെങ്കിൽ 5000-നെ കറണ്ട് ആയിട്ട് വെക്കാൻ പറ്റൂ? ഇല്ല, കാരണം 5000-ന്റെ ഉള്ളിൽ ഒരു ഇൻട്രസ്റ്റ് എന്ന് പറഞ്ഞൊരു എലമെന്റ് ഉണ്ട്, ശരിയല്ലേ?
അതെ സർ.
ഞാൻ ഇന്ന് 31 മാർച്ചിലാണ് നിൽക്കുന്നത്. ആ ഇൻട്രസ്റ്റ് ഡ്യൂ ആവുന്നത് ഇനി ഒരു 12 മാസം കൂടി മുന്നോട്ട് പോയാലല്ലേ അസേ പറയുന്നത്. നമ്മളിപ്പോ എന്റെ സ്ക്രീനിലുള്ള ഫിഗർ വെച്ച് നോക്കിക്കഴിഞ്ഞാൽ 1446 എന്നുള്ള ഇൻട്രസ്റ്റ് ഇന്ന് ഡ്യൂ അല്ല, അത് ഇനിയും ഒരു 365 ദിവസം കഴിയുമ്പോഴല്ലേ ഡ്യൂ ആവുള്ളൂ.
അതെ സർ.
ഞാൻ ബാലൻസ് ഷീറ്റ് ഉണ്ടാക്കുന്നത് ഇന്നല്ലേ, ഈ ഇൻട്രസ്റ്റ് ഡ്യൂ ആയിട്ടില്ലല്ലോ, ഇതിന് മുന്നത്തെ ഇൻട്രസ്റ്റ് എല്ലാം കഴിഞ്ഞു. അപ്പൊ ഈ 1446-നെ നമ്മുടെ ലയബിലിറ്റിയിൽ കൊണ്ടുവരേണ്ട ആവശ്യമില്ല. അതുകൊണ്ടാണ് 5000-ൽ നിന്നും ആ 1446-നെ മാറ്റി കറണ്ട് ആയിട്ട് 3554 വെച്ചത്. ഓക്കെ ആണോ?
ഓക്കെ സർ.
അപ്പൊ ഒബിയസ്ലി ബാലൻസിംഗ് ഫിഗർ എന്തായിരിക്കും? നോൺ കറണ്ട് അല്ലെ? 11,000 ടോട്ടൽ വാല്യൂ ആണെങ്കിൽ അതിൽ 3554 കറണ്ട് ആണെങ്കിൽ ബാക്കിയുള്ളത് എന്തായിരിക്കും?
നോൺ കറണ്ട്.
നോൺ കറണ്ട് അല്ലേ? അല്ലടാ, നോൺ കറണ്ട്
അതെ
അല്ലേ?
സർ, നോൺ കറണ്ട് ലയബിലിറ്റി.
അപ്പൊ ആ സ്പ്ലിറ്റിംഗ് ഇൻഡേസിൽ മാത്രമായിട്ടുള്ളതാണോ അതോ ഇപ്പോഴും നമ്മുടെ റിയൽ ലൈഫിൽ നമ്മൾ AS-ലും ചെയ്യുന്നതാണോ?
AS-ലും ചെയ്യുന്നുണ്ട് സർ.
ഇഫ് പ്രോപ്പർ ആയിട്ട് ഇപ്പൊ ഓഡിറ്റ്, ഐ ഡോണ്ട് നോ യു ആർ ഇൻടു വിച്ച് ഇയർ ഓഫ് ആർട്ടിക്കിൾഷിപ്പ്, ഏത് വർഷമാണ് ആർട്ടിക്കിൾഷിപ്പിന്റെ?
സർ ഇപ്പൊ സെക്കൻഡ് ഇയർ ആണ് സർ.
അപ്പൊ ഡെഫിനറ്റ്ലി ഇതുപോലത്തെ എന്തെങ്കിലും കാണാനുള്ള സാധ്യത ഉണ്ട്, അറ്റ്ലീസ്റ്റ് വായിച്ചെങ്കിലും കണ്ടിട്ടുണ്ടോ?
ഉണ്ട് സർ, കണ്ടിട്ടുണ്ട്.
അപ്പൊ ഈ രീതിയിൽ സ്പ്ലിറ്റിംഗ്, അപ്പൊ ഇൻഡേസിനും ഉണ്ട്, ഇവിടെ ഉണ്ട്, പിന്നെ ഇവിടെ ഇത്രയും കൂടി ഈ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് എന്നുള്ള ഒരു കോൺസെപ്റ്റോട് കൂടിയുള്ള സ്പ്ലിറ്റിംഗ് ഉണ്ട്. അവിടെ അങ്ങനത്തെ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് എന്നുള്ള കോൺസെപ്റ്റ് ഒന്നും ഇല്ല. ഓക്കെ ആണോ?
ഓക്കെ സർ.
ഓക്കെ. അപ്പൊ ഇഫക്റ്റീവ് ഇൻട്രസ്റ്റ് വന്നു കഴിഞ്ഞാലുള്ള സ്പ്ലിറ്റിംഗ് നമ്മൾ ഇപ്പോ പഠിച്ചാൽ ഇതിനെ ബേസ് ചെയ്തിട്ട് നമുക്ക് ഇനി എന്ത് പഠിക്കാൻ പറ്റും? ഇനി കോമ്പൗണ്ട് ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്, ഈ വേർതിരിക്കുന്ന കോൺസെപ്റ്റ് നല്ലോണം എക്സ്പ്ലെയിൻ ചെയ്യാം. കാരണം ലയബിലിറ്റിക്കാണ് ഇങ്ങനത്തെ ഒരു ടേബിൾ വരുള്ളൂ, ഈ ലയബിലിറ്റിക്കാണ് ഇങ്ങനത്തെ ഒരു റീപേയ്മെന്റ് ടേബിൾ വരുള്ളൂ, ഇക്വിറ്റിക്ക് ഇങ്ങനത്തെ ഒരു റീപേയ്മെന്റ് ടേബിൾ ഉണ്ടാവില്ല, ശരിയല്ലേ?
അതെ സർ.
അപ്പൊ കൺവേർട്ടബിൾ ഡിബെഞ്ചർ എന്ന് പറഞ്ഞൊരു കഥ പറഞ്ഞിരുന്നു. കൺവേർട്ടബിൾ ഡിബെഞ്ചർ, അതിൽ ഇൻട്രസ്റ്റ് കൊടുക്കേണ്ടത് ക്യാഷ് ഫ്ലോ ഇല്ല, റിഡംഷൻ സംഭവിക്കുന്നത് ഷെയർസില. അപ്പൊ ഇൻട്രസ്റ്റ് പേ ചെയ്യാനുള്ള ബാധ്യതയില്ലേ? അത് ലയബിലിറ്റി. ഇൻട്രസ്റ്റ് പേ ചെയ്യേണ്ടത് ക്യാഷ് ആയതുകൊണ്ട് തന്നെ അവിടെ ഒരു ലയബിലിറ്റി കോമ്പണന്റും ഉണ്ട്, ഒരു ഇക്വിറ്റി കോമ്പണന്റും ഉണ്ട്. അപ്പൊ നാളത്തെ ക്ലാസ്സിൽ വരുമ്പോൾ ഹൗ ടു ഡു ദി അക്കൗണ്ടിങ് വിത്ത് റെസ്പെക്ട് ടു കൺവേർട്ടബിൾ ഡിബെഞ്ചർ. ഇവിടെ നോക്കിക്കഴിഞ്ഞാൽ FS 8-ന്റെ ഉള്ളിൽ കൺവേർട്ടബിൾ ഡിബെഞ്ചറിനെ എങ്ങനെയാണ് ലയബിലിറ്റിനെ മുറിക്കുന്നതും ഇക്വിറ്റിനെ മുറിച്ച് എഴുതുന്നത്. ഇപ്പൊ നമ്മൾ രണ്ട് സാധനം മുറിച്ചെഴുതാനാണ് പഠിച്ചത്, കറണ്ട് നോൺ കറണ്ട് സ്പ്ലിറ്റിംഗ് ആ പഠിച്ചത്. 100% ലയബിലിറ്റി ആണെങ്കിൽ അതിൽ എത്ര കറണ്ട്, അത് എത്ര നോൺ കറണ്ട് പഠിച്ചില്ലേ? ഇനി ഒരു ഇൻസ്ട്രുമെന്റിനെ തന്നെ എടുത്തു കഴിഞ്ഞാൽ അതിൽ എത്രയാണ് ലയബിലിറ്റി, അതിൽ എത്രയാണ് ഇക്വിറ്റി എന്നുള്ള സ്പ്ലിറ്റിംഗ് ആണ് ഏതാണ്? കോമ്പൗണ്ട് ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്. ഏതാ?
കോമ്പൗണ്ട് ഫിനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്.
ഇപ്പോ ഈ പഠിപ്പിക്കുന്നതെല്ലാം ഏത് സ്റ്റാൻഡേർഡിന്റെ ഭാഗമാണെന്ന് ചോദിച്ചാൽ ഇതെല്ലാം ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ് എന്ന് പറഞ്ഞ സ്റ്റാൻഡേർഡിന്റെ ഭാഗമാണ്. ഏതാണ്? ഫിനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ്. പക്ഷെ ഞാനിപ്പോ ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ് എന്ന് പറഞ്ഞ ചാപ്റ്റർ ആണോ പഠിപ്പിക്കുന്നത്? അല്ല, ഞാനിപ്പോ പഠിപ്പിക്കുന്നത് ഫണ്ടമെന്റൽസാ. എന്തുകൊണ്ട് ഈ ഫണ്ടമെന്റൽ എടുക്കണേന്ന് പറഞ്ഞു കഴിഞ്ഞാൽ നമ്മൾ മുന്നോട്ട് പോകുമ്പോൾ നമുക്ക് ഷെഡ്യൂൾ 3 എനിക്ക് ബാലൻസ് ഷീറ്റിനെ പറഞ്ഞാണ് ഇൻഡ് ASൽ എന്താണ് ഉള്ളതെന്നാണ് പഠിപ്പിച്ചു തരേണ്ടത്. പക്ഷെ ബാലൻസ് ഷീറ്റിൽ പോകുമ്പോൾ ഞാൻ ഈ ബാലൻസ് ഷീറ്റിന്റെ ഫോർമാറ്റ് ഇന്ന് എടുത്തിട്ട് ഇത് നോക്കിക്കേ, ഇതെന്താ എഴുതിയേക്കണേ? എന്താണ് എഴുതിയേക്കണേ? ഇക്വിറ്റി കമ്പോണന്റ് ഓഫ് കോമ്പൗണ്ട് ഫിനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ്. ഇതൊരു ബാലൻസ് ഷീറ്റിന്റെ ഉള്ളില് ലയബിലിറ്റി സൈഡിലുള്ള ഒരു ഡിസ്ക്ലോഷർ ആണ്. മനസ്സിലായോ? ഞാൻ ഈ സാധനം ഒരു എക്സാമ്പിൾ വെച്ച് കാണിച്ചു തന്നില്ലെങ്കിൽ ഇത് പറഞ്ഞു കഴിഞ്ഞാൽ നിങ്ങൾക്ക് ഒരിക്കലും മനസ്സിലാവില്ല. വാട്ട് ഈസ് ദാറ്റ് ഐ ആം ട്രൈയിങ് ടു കൺവേ. ആർ യു ഏബിൾ ടു ഗെറ്റ്? യെസ് സർ. ഞാൻ ഒന്നോ രണ്ടോ എക്സാമ്പിൾ വെച്ച് ഒരു ബേസിക് ആയിട്ടുള്ള എക്സാമ്പിൾ എങ്കിലും കാണിച്ചു തരണ്ടേ? ഇത് ഇങ്ങനെയാണ് പറഞ്ഞതെന്നൊന്ന് കാണിച്ചു തരാം. പക്ഷെ വി വിൽ ബി കമ്മിങ് ഇൻ ടു ഇൻഡ് AS. ഈ പറഞ്ഞ പോലെ 32 അല്ലെങ്കിൽ 109 ഇൻ ഡീറ്റെയിൽഡ് ആയിട്ട് നമുക്കൊരു 30 മണിക്കൂറിന്റെ വേറെ ക്ലാസ് ഉണ്ട്. ഞാനിപ്പോ ഇൻഡ് AS മൊത്തമായിട്ടും ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ് അല്ല പഠിപ്പിച്ചത്. അറ്റ്ലീസ്റ്റ് ഒന്ന് ബാലൻസ് ഷീറ്റ് ഇന്റർപ്രറ്റ് ചെയ്യാൻ വേണ്ടിയിട്ടുള്ള ഒരു മിനിമം അറിവ്, അതിന് വേണ്ടിയിട്ടുള്ള മിനിമം സംഭവങ്ങൾ മാത്രമേ ചെയ്യുന്നുള്ളൂ. ക്ലിയർ ആണോ?
Okay, sir.
അപ്പൊ 1 or 2 or 3 ക്ലാസ് കഴിഞ്ഞ് once I'm comfortable that you are okay with certain terminologies, ഈ ബാലൻസ് ഷീറ്റ് വായിച്ചാൽ തിരിച്ചറിയാൻ പറ്റുന്ന രീതിയിൽ ടെർമിനോളജീസ് ഒന്ന് ഡെവലപ്പ് ആയെന്ന് ഉറപ്പ് വരുത്തി കഴിഞ്ഞാൽ പിന്നെ നമുക്ക് ഷെഡ്യൂൾ 3 ഫുൾ ആയിട്ട് കവർ ചെയ്യാൻ പറ്റും. ബാക്കിയുള്ള ആസ്പെക്ട്സ് ഒക്കെ കവർ ചെയ്ത് ഒരു സ്ട്രക്ചർ Ind AS ഡെവലപ്പ് ചെയ്യാൻ പറ്റും. ഇസ് ദാറ്റ് ഓക്കെ? ഒരു മൈൻഡ് മാപ്പ് ഒരു സ്ട്രക്ചർ, ആ സ്ട്രക്ചർ കിട്ടിക്കഴിഞ്ഞാൽ പിന്നെ ഓരോരോ Ind AS നമുക്ക് ഇൻഡിവിജ്വൽ ആയിട്ട് കിടക്കാം. Are you able to get?
Yes, sir.
And by no means don't think that we have covered which standard. ഫൈനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ് എന്നുള്ള സ്റ്റാൻഡേർഡ് നമ്മൾ കവർ ചെയ്തു കഴിഞ്ഞാൽ കവർ ചെയ്തിട്ടില്ല, ഒന്നും ആയിട്ടില്ല, അതിന്റെ ബേസിക്സ് ആയിട്ടില്ല എന്ന് ഞാൻ വിചാരിച്ചു. ക്ലിയർ ആണോ? ഇപ്പൊ നമ്മുടെ ഒന്ന് ഈ ബാലൻസ് ഷീറ്റ് ഷെഡ്യൂൾ 3 ഒന്ന് മനസ്സിലാക്കി തരാൻ വേണ്ടി ഇത് നോക്കിക്കട്ടെ, എന്തായാലും എഴുതി വെച്ചേക്കണേ.
Instruments entirely equity in nature.
നമ്മൾ പറഞ്ഞു 100% ഇക്വിറ്റി ക്യാരക്ടറിസ്റ്റിക്സ് എക്സിബിറ്റ് ചെയ്യണല്ലേ ഇർറിഡീമബിൾ പ്രിഫറൻസ് ഷെയർസ്. നമ്മൾ ഇന്ന് രാവിലെ പറഞ്ഞു ഇർറിഡീമബിൾ പ്രിഫറൻസ് ഷെയർ, കാശ് തിരിച്ചു കൊടുക്കേണ്ട ഒരു ബാധ്യതയില്ല. അപ്പൊ ഇനിയിപ്പോ ലൈൻ വരുവാണെങ്കിൽ ഐ വിൽ ബി ഏബിൾ ടു ഈസിലി കമ്മ്യൂണിക്കേറ്റ് വാട്ട് ദേ ആർ ട്രൈങ് ടു പ്രസന്റ് ഹിയർ. ഓക്കെ ആണോ?
Okay, sir.
അപ്പൊ ബേസിക് ഫണ്ടമെന്റൽസ് ആണ്, ബാലൻസ് ഷീറ്റിന്റെ ഫോർമാറ്റ് ആണ് ഞാൻ പഠിപ്പിക്കേണ്ടത്. അല്ലെങ്കിൽ അപ്പൊ ബാലൻസ് ഷീറ്റിന്റെ ഫോർമാറ്റിൽ പഠിപ്പിക്കുമ്പോൾ കുറെ ടെർമിനോളജീസ് കയറി വരും വിച്ച് ഇസ് ബേസ്ഡ് ഓൺ വേരിയസ് സ്റ്റാൻഡേർഡ്സ്. അപ്പൊ അതിന്റെ ഒരു ബേസിക് ഐഡിയ തരലാണ് ഇപ്പോഴത്തെ നമ്മുടെ വാമപ്പ് ക്ലാസിന്റെ ഉദ്ദേശം. നമുക്ക് ഒരു 5 or 6 ക്ലാസ് ഉണ്ടാവും ഇങ്ങനത്തെ വാമപ്പ്. ക്ലിയർ ആണോ?
Okay, sir.
വാമപ്പ് പഠിച്ച് ഏകദേശം ഒരു നമ്പറിനെ പറ്റി ഒരു ഐഡിയ ആയിട്ട് വേണം നമുക്ക് ഷെഡ്യൂൾ 3 കയറി പിന്നെ നമുക്ക് ഓരോ ആസ്പെക്ട്സിലേക്ക് കയറി ഓരോ സ്റ്റാൻഡേർഡിലേക്ക് പോകാൻ. അപ്പൊ ആക്ച്വലി വി ആർ നോട്ട് ലേണിംഗ് എനി സ്റ്റാൻഡേർഡ്, വി ആർ നോട്ട് ലേണിംഗ് ഷെഡ്യൂൾ, വി ആർ ജസ്റ്റ് ഡൂയിങ് സം ബേസിക് ഫ്രെയിംവർക്ക് ഫോർ Ind AS. വാമപ്പ് എന്ന് പറയും. ഓക്കെ ആണോ?
Okay, sir.
സോ ദാറ്റ് ഇസ് ദി. അപ്പൊ ഇതുവരെ പറഞ്ഞേക്കുന്ന ആസ്പെക്ട്സ് ക്ലിയർ ആണ്?
അതെ സർ, ക്ലിയർ ആണ്.
എന്തെങ്കിലും ഡൗട്ട് ഉണ്ടോ?
സർ കുഴപ്പമില്ല സർ, എല്ലാം ക്ലിയർ ആണ് സർ.
ഓക്കെ, ശരി. സോ വിൽ മീറ്റ് ടുമോറോ. ബൈ ബൈ.
ഓക്കെ, താങ്ക് യു സർ.